In today's episode, I'm interviewing Ollie and Sam, who are the founders of Olsam Group. Olsam Group is an Amazon aggregator, which is essentially a fancy word for saying they go around, they buy Amazon businesses, they combine them, and then they reap the rewards. I speak to Ollie and Sam about why they started Olsam Group, what their experiences are, and also how they go about valuing Amazon businesses. So if you're interested, stay tuned. Cool. So Ollie, Sam, thank you so much for joining me. Ollie, I want to kind of jump straight into it. What is Olsam?
Well, firstly, Joe, many thanks for having Sam and I on. It's a real pleasure to be on your podcast today. So Olsam, we are a UK-based Amazon acquirer and operator. The term, often being bandied around now in the space is Amazon aggregators. So started with my co-founder, who is also my brother, Sam, who's also on today's podcast. But we started last year and been hugely excited about the space. The growth in e-commerce, partly supported by COVID, but clearly a big shift from high street retail to online. And it's been a really exciting rollercoaster couple of months.
And you mentioned, I know I've kind of sent you through some questions, and I'm going to be reordering them now. You mentioned aggregators. We won't go into any sort of competition, but it's quite a trendy thing at the moment. There's a lot I've seen a lot of it in the space. Why do you think that is? Why are so many people interested in this at the moment?
Yeah, so I think, clearly the growth in e-commerce and particularly the Amazon marketplace has been enormous over the past couple of years. So naturally, I think people are really, attracted and excited about the space. I think also, like, at their heart, Amazon FBA businesses of a certain scale are, more simple businesses than, say, a lot of other, typical types of M&A transactions that, people might be involved in, where, there's a number of employees, there's physical footprint. Amazon FBA businesses, you can, close a deal from start to finish in 4 weeks, I think is, mine and Sam's sort of record time. So, for us, I think
4 weeks, that's incredible.
Yeah. No, it was, fortunate case that, the seller came very well prepared. So had, a lot of the information ready at hand. But yeah, for 4 weeks from start to finish, which was, fantastic. And remarkably, very smooth process.
And for the benefit, I suppose, of anyone listening to this who doesn't actually know what an aggregator is, what is that? And Sam, I realise that we've not properly introduced you. Would you like to say hello?
Yeah, no, sure. So I'm one of the co-founders of Olsam alongside Ollie. We have quite different functions, which we'll come on to. But Ollie basically, his background's finance, mine's more e-commerce, consumer goods. So I used to work for Amazon in their marketplace team. And had an amazing time working with UK, European small businesses across a variety of categories. And then whilst I was there, I decided to start and scale and eventually exit, my own private label brand, which was such a good experience because I think it makes you aware of actually just how hard it is to get a business to a certain degree, to a certain point. Amazon is tricky. So, aside from major macro issues we're facing, say in supply chain, dealing with the beast that is Amazon is really hard. So every business we speak to, it's so interesting to hear the stories about how they got to where they did. But a bit of a digression. Sorry, Jay, you were saying it. Sorry.
No, that's okay. So for the benefit of anyone who doesn't know what an aggregator is, because essentially, I'm right in saying that Olsam Group is an aggregator, right? You're going around, you're buying Amazon businesses and combining them to make one sort of super Amazon business. Have I just answered my own question there, I think?
Yeah, exactly. So exactly that. And I think, for Olsam, we have, like, Amazon is in our DNA, as Sam sort of outlined. So, he spent a number of years in Amazon's marketplace team here in the UK. And, as you know, Joe, he had his own Amazon FBA brand before starting Olsam. That, I think, makes us quite different in this space. But yeah, so Amazon aggregators are pretty much exactly as you outline, Joe. I don't think I could, provide a better definition than that.
It's yeah, I suppose, yeah, the combination of making one big giant business. Do you, when you're looking for businesses to buy, if someone, did you ever find businesses that don't sell on Amazon? Like, would you consider acquiring one of those, or do they have to sell on Amazon and only on Amazon?
So I think, yeah, I'll just take this one. So, like, right now, our focus is on Amazon businesses, purely because our skill set from an operations perspective is Amazon, and the beauty of Amazon is that you can scale brands very quickly through a shared operating platform that we have. Whether it's just launching cross-border very easily, Amazon essentially they're trying to make cross-border commerce seamless. The challenge with, I guess Shopify and I guess D2C platforms is that there are other complexities associated with that. There's, much higher customer acquisition costs. You've got to take care of your own logistics, albeit there are amazing companies making this really, really easy, which is fantastic to see. And I think we'll see a lot of progression there. But in answer to your question, we are right now very focused on Amazon brands. Specifically, and I think that's where we like to see a lot of the revenue come from. But definitely long term, where we see Olsam, and Ollie will come onto this, the long term, I think, vision of what we're trying to do, and I'm sure what other companies do and are trying to do is take these incredibly successful Amazon brands, which have incredible reviews and really a proof of concept, and then take them off Amazon to other marketplaces. And other channels. I think that's definitely the future, and that's what's so exciting. And I just wanted to come back, Joe, to your point around like aggregators, and I guess what differentiates us, and I'm sure others as well, is we don't just buy and hold brands. Like there are aggregators that are literally just acquiring and just holding. I think what we look for, and what we'll come on to, is brands that have amazing potential and that can grow. And the fun part for us is buying them and then actually investing a lot of working capital, operations, whether it's brand operations, creative, marketing, PPC, and growing these brands. I think that is a totally separate function, and really hard, because like managing one Amazon brand is one thing, managing like more than one is super tough. So just kind of wanted to
yeah, and on that, you guys have built out a team, haven't you? Because it's not just Ollie and Sam, although the name is Olsam Group. You've actually already built out a team. Do you mind if I ask how many people are in the team? What sort of functions and roles you guys have got?
Yeah, so with regards to the team, I mean, my area, my background is more finance, M&A related. So we've got a very experienced investment team, but they have like quite unique backgrounds. So a lot of them are also, whilst coming from M&A, they're also software developers. Our head of investments actually set up and created his own gaming software development company, on the side. So that another chap in our investment team, he also worked in investment banking for a while, but then went and did a master's in computational science and worked as a software developer for a fintech business. So, we have quite different characters and personalities on the investment team. They're not pure play investors, they're entrepreneurs, they're very much technology driven, and then clearly on the operations side, we are, as I said, Amazon's in our DNA, so we are full of ex-Amazon employees, great quality talent who really know their way around Seller Central and some of Amazon's sort of quirks, and then we have a very important creative team as well. And I think creatives, they bring a huge amount to Olsam, and really can like transform brands that we acquire. And they've been really exciting seeing them and the work that they're doing on our current brands that we've acquired. And I know some of the sellers have really enjoyed seeing the creative process from ideation, like sort of sparking a few ideas, to now all the way to the packaging now coming off the press in China. I think it's they've really enjoyed seeing it come to life.
And you said some of the sellers there. Does that mean? Do you mean like the people that you've kind of purchased the businesses from in the past? Are you still involved?
Yeah.
Are they still involved at all, or?
Yeah, so I mean, from our side, we love to have good relationships with the sellers. For us, it's more than just a pure financial transaction. It's not like buying a house that they hand over the keys and that's it. there is a migration period where, it requires a lot of trust, to sort of help with the handover, that the other person on the end of the line joins the call and helps, with the handover, because undoubtedly there's always, sort of teething issues as the migration takes place. So, for us, it's very important that there's, a good relationship there. And so, the sellers, often we have like an earnout in place, so we keep them up to date with, all the efforts that we're doing to maximize that earnout as much as possible, because it's in our interests, Olsam's interest, to smash those earnout targets as much as in the sellers. It's very important that also ourselves, we have our own investors who want to see growth and sales. They're not interested in seeing earnouts being missed, because that means that the business isn't performing.
And for the benefit of anyone who doesn't know what an earnout is, what is it?
So an earnout is essentially a instrument in a transaction which aligns the interests of the buyer and the seller. So typically it would relate to, say, the future performance of the business. Say, sales grow by 10% on prior year, the seller will get an additional, X in payout. So what it is it, the aim of it is really to align both buyer and seller in, seeing the business grow strongly and its future performance.
And is there any sort of, I suppose, opposite to that? So if suddenly the sales tank, and I guess I'm kind of thinking of this as like, as myself as an online business owner, we've kind of spoken about my business separately, but say we then sold it to you and you guys either ruin it or I've completely just had one like lucky year. Do you guys have like an opposite clawback where you would say, well, profits have halved, so therefore we have to claw something back?
No. So that's where it comes down to, like, the relationship with buyer and seller. It's important we do our DD process. So, I guess just digging in a bit deeper into like deal structure, I think, typically there's what's called a cash upfront amount. So that cash upfront amount doesn't change. There is no clawback. Once that leaves the Olsam account and goes to the sellers, that's it. Yeah. There's no getting that money back. There is no clawback, which is why, at Olsam we've got a great investment team who are very familiar with the Amazon FBA ecosystem to sort of analyze, what we think are like, top performing businesses with great potential, and why when we go through the due diligence process, it's an important step, because we're taking, a big leap of faith with, handing over, what can be a life-changing amount of money, and that there is no clawback. Where it comes into play is obviously the earnouts. So the earnouts are clearly contingent on future performance. And so, if, say, the earnouts aren't hit, there's no money paid out. But as I said, from Olsam's perspective, it's so much more important that we hit earnouts than we miss them. Because for us, we're trying to build a business very much for the long term. We want sellers who, rave about Olsam's performance and how they've, improved their business and how they hit their earnouts. It's just not in anyone's interest to miss those earnouts. And so, I think that's something that's important for sellers to kind of, understand. I think they often see earnouts as perhaps like a way of, a buyer, avoiding paying like, additional purchase price. But I can't stress enough that, aggregators in this space, and particularly as speaking for Olsam, we 100% want to hit all those earnouts.
Yeah, I think that makes a lot of sense. I mean, you're basically saying you want to incentivize the buyer to not just go, here's the keys, see you later. You want them to kind of still be involved in it, because they built the brand to that point, didn't they? So there's still a lot of value in what they did.
Yeah.
And I think,
you take Sam with Beachmore Books, Sam. I mean, there's so much product knowledge that you have. So.
I think what's amazing, we speak to a lot of business owners, Joe, and they're like, they just know so much about the company, the business, that it will take us time to learn. And I think, we always think that, working closely with the business owner for that sort of, as already said, that migration period is so important. And we never impose, if we're not absolutely 100% sure, we would never impose like a significant operational change, a SKU roadmap change, whatever it may be. Like, the business better than us. you are almost the guardians of this business and have poured, everything you have for the last couple of years. So we really, really take the lead from the seller, certainly on like product development, product roadmap. As you know so much about the business. So
I know this might be asking for some of the secret sauce here, but and feel free to then not talk about it. But do you ever have the situation, or would you ever consider the situation of not buying 100% of the business rather than having earnouts? Because imagine you've got, I suppose, a business owner who really believes in the brand, but for whatever reason needs extra capital. Because that's not really something I've seen too much when our clients have sold businesses in the past.
Yeah.
I mean, do you guys do that? Is there a reason you wouldn't, if not?
Yeah, I'm happy to take that one. So, with regards to that, I guess it comes down to speed. So a lot of the sellers we talk to, they're looking for a quick exit. When you're doing minority investments, they take a bit longer because, Olsam, we're not taking control of the business. So, clearly, the seller that we're investing in, they can then, potentially go off and do anything with that money. And so, that's one thing. And then also, in relation to, say, all the legal fees and costs that are involved, the business really needs to be of a certain size in order to make it worthwhile to go through all the due diligence, to get lawyers involved. And, so typically, unless the business is of sufficient scale, the costs involved in kind of pulling together that agreement can take a bit of time and be quite complex. But in exceptional circumstances where we really like the founder and there's like a lot of trust there, then I think, we do look at those opportunities. But for the reasons that, I outlined, it's not somewhere that is where a lot of, Olsam spend a significant amount of time.
Yeah, that makes sense. And then moving slightly away from, I suppose, how the deal is structured, how do you guys know that you're not getting a dud? Because for me, if I was looking at it from the outside, if someone wants to sell their business, there's usually a reason, right, that they want to sell it. And usually you'd think that it's because the business isn't working. I suppose I should first ask, what are the sort of reasons that you found that people actually want to sell their business?
Yeah, I think, Ollie, I'll take this. So you're completely right. So in our initial introductory call we have with a seller, a business owner, half an hour, a key point we're trying to understand is the motivation, like the why behind, not only why did you start it, but also why are you looking to exit. And I think it's really important that sellers are really comfortable and confident in their thought processes. They're going to go and go ahead with the exit. I think reasons why really vary. So, we've had business owners who've exited for very personal reasons, to do with, personal circumstances. Sometimes it's business owners just want to free up some cash. Sometimes they want to put cash in towards a different business, maybe another Amazon FBA brand, start it all over again. Sometimes to buy a house. There's a really variety of reasons.
They're addicted to torture, I feel like, if they're going to keep putting themselves through that.
Yeah, no, honestly, yeah, we spoke to some businesses. They love the process of getting the brand from like 0 to 1 million. Like that's that kind of the most challenging part, and so it really varies from personal to professional reasons.
Yeah, and I think for a lot of people, they want to sort of diversify their wealth. Probably almost all their finance is tied up in their Amazon FBA business, and to continue to invest in growing it will suck up even more of their financial resources. And so a lot of people are thinking, what, I want to take a step back and just diversify. So take some money off the table and spread it, whether it's maybe investing in a bit of property or maybe like a different business venture that they have, but they think, okay, I just want to just diversify.
I think I'd also just sorry, Judge.
No.
Sorry, go ahead. No, it was just one final thing I was going to say was I think more around just operational complexities of Amazon. I think two parts is that we're seeing like Amazon's products and tools get quite a lot more sophisticated. And let's just take PPC for example. The number of products and tools and features they're rolling out, it's crazy how fast how it's developing. Combined with that, kind of like macro situations that are no one can control, whether it's Brexit, whether it's COVID. There are all these headaches that I think sellers are facing now they perhaps didn't face even a couple of months, so say 12 months ago, and it comes a point where like a single solopreneur, it becomes almost just a headache to run. And I think, and we're certainly seeing that now, is it's a lot of one of the major reasons is this has become a nightmare to run. And if I'm going to, as Ollie said, want to grow it further, I'm going to need to actually hire maybe a full-time supply chain manager, maybe a full-time, full-time accountant, for example. There are, deep operational challenges I think sellers are facing now.
And how do you guys then ensure that it's not a dud, and it's that actually that it's those reasons? I guess, are there any sort of red flags that pop up for you?
So I think when we're looking at businesses, I think we kind of split our approach in sort of two parts. We're looking at, just the financial fundamentals of the business. So, how's revenue trended over time? Is it growing or is it declining? Now, would we immediately pass on a business where the revenue is declining? No, we would ask questions around it, but clearly, if revenue's on the way down, we want to ask, why that is the case and understand it. Other financial metrics that we look at would be, for example, like margin. So is margin staying constant? Is it tightening? If it's tightening and getting smaller, again, why is that? Has a new competitor entered the space, which has meant, okay, their prices, say in the last 3 months, they've had to halve to keep up. And so, I think when you see kind of indicators like that, with say like new competitor entrants who have caused like a massive correction, say in pricing, that's clearly like, a sort of red flag that we then are just keen to kind of understand, okay, with that new competitor, what's the long-term trajectory and outlook for this business? And then, on the Amazon side of things, it's around, just account health. Have there been any black hat tactics? How have its ratings trended over time? That sort of thing. So we kind of split it between, financials and Amazon metrics, and that usually gives us like a good indication of what the long-term performance of the business is going to look like.
And have there ever been any that you've kind of had to walk away from, where you've started looking into it and seen these sort of black hat tactics or these sort of red flags? Yeah. I mean, so we pass on, hundreds of deals. So we are like very selective in the businesses that we want to acquire. We're only really looking for the best, and we really like the businesses that we do acquire. We really focus our energies on them. So, we're not acquiring everything and anything that comes our way. We are very clear in what we like, the founders that we want to partner with. And then, more importantly, like operationally, we want to grow these businesses. And so, if you're, you've got to make sure that, the team is in place to grow them. And so, we like to, for the businesses that we acquire, we have very high confidence in them, and then we invest in their growth.
And I think it's on our website. One of the things that we really talk about is having a motivated founder. And I think we've had it in the past where there have been dodgy tactics going on, whether it's buying reviews. And look, this stuff happened in the past. Like that's like obviously like but I think now as the marketplace develops and grows, that's not a sustainable growth lever. And there've been instances where that has happened, and that for us is a bit of a red flag. I think the point to really emphasize is the business owner is so important in this process. The business is super important. So is the owner. And there've been times where, to be totally candid, we've had conversations where we haven't felt super comfortable that this is a partnership that we feel comfortable entering. We have concerns the founder will just, as you said earlier on, give us the keys and the hands off the wheel, and that's just not a great relationship to have. And likewise, these e-commerce owners need to feel that they get on with us. It's so important that if we're having a conversation that they feel I trust Olsam, because it's such a personal process that they're going through. So yeah, just kind of wanted to emphasize that point.
So one of the biggest benefits for aggregators is obviously this kind of economies of scale, and the fact that you can kind of use one subscription, like you said, one accountant, one particular person for a particular role. What happens when you acquire one of these businesses? Do you combine everything into one bank account, one Amazon account, and just kind of ruthlessly go through and start trimming loads of the subscriptions, or do you treat them like separate business units?
From an ops perspective, I'll let Ollie take some of the more sort of function consolidation. But just like on Amazon, as you know, having multiple accounts is like, it's not technically allowed unless you fulfill various criteria, right? So if you have sort of, separate business, basically it has to be almost like a separate trading function, different brands, different products, different whatever. And so from that perspective, we are very methodical about getting the back end in line. So yes, we have different bank accounts for each business, different business addresses. They are essentially, by all intents and purposes, just different companies. What I'd say, Joe, is that in the US, it's just a bit further ahead in terms of like Amazon's quite comfortable with this, what's going on in terms of sort of the transfer of buying and selling of these like internet assets. In the UK, it is quite. They are a bit behind, and certainly, when we look at even after the funds have been transferred to your bank account, there's a period, this migration period, where we're taking ownership of the Seller Central, and that process is a really fragile process, because as you know, if you don't inform Amazon about you're changing your bank account details, they'll suspend you. Well, there are things that Amazon will do very off the cuff that will potentially jeopardize the success of the business. So in the UK, it's a bit more nascent here. We've got to be super careful about that process. But no, in terms of like tools, we are, we as you said, we try and consolidate the use of, say, a dashboard tool or an accounting tool. But Ollie, in terms of, do you want to cover the functions?
Yeah, so I think, the main thing is really like, and I have a massive amount of admiration for founders in that they wear so many different hats. Like they are the supply chain expert, they are the VAT expert, they are, the PPC expert, legal expert. It's incredible. And when we talk to founders, the breadth of their knowledge across a vast array of topics is huge. But there is no denying the fact that, as businesses reach a certain scale, you need to have specialist knowledge. You need, to rely on that. And I think, it's very hard, say for an Amazon FBA owner, like who's, I don't know, making like 250, 300,000 SDE a year, to then think, okay, I'm going to invest, 50,000 in say, hiring this person or that person, unless, they kind of see themselves, properly tied to this business for the next like 4 or 5 years. The advantage, I think, for Olsam is that all our brands that we acquire benefit from this sort of specialist function knowledge. And so, it's beyond just cost saving. It's about just, professionalizing it and driving, additional growth. So for example, if you have the right IP registrations in place, you can be much more efficient in, say, kicking off copycats that are like, trying to rip off your product on Amazon. It's often there might be like a sort of investment in that side of things, but you see the benefit in terms of your sort of revenue growth on that side of things.
Do you guys find it difficult to keep track? Because especially if you have a number of businesses, because I had 4 kind of our peak when we were doing this full time. And honestly, keeping track of all these different bank accounts and purchase invoices and things like that, it felt that in itself become a full-time job. Do you find it difficult? And then how do you manage all of that? Because I imagine there must be a lot of moving parts.
Yeah, no, for sure. It's as you said, there's a lot of moving parts, but we're very lucky that we have people dedicated to each of those moving parts. So in a way, like we've almost divided and conquering. So we've got, supply chain team who just focus on placing POs, international logistics, customs clearance. That's just their job. We have a team, whose job it is to focus on the accounts, making sure the accounts are very, in line, our books are in order. So we have specialized functions to do that. I think it must be so tough. And certainly when Ollie and I were getting Olsam going right in day one, it was really hard because we were almost, trying to wear all these hats. And it makes us really, it's like these business owners, it's really incredible how they can, wear so many different hats.
And, just I guess just to add to that as well, I mean, we see a big role in technology. And so, again, Olsam, we're much more than just, you know, an acquirer and holding brands. You know, we're very much building like an e-commerce company for the future, and we see sort of technology being a massive part in terms of, you know, streamlining and simplifying all those you know, areas of complexity that you spoke about, Joe, so that, you know, we can remain a super lean and efficient organization. Like, I always think like Amazon FBA owners, like, I come from consulting, and I just think like Amazon FBA owners are like, you know, run the most optimal businesses, like super high growth, but incredibly lean cost base, like very few overheads. And like, they are all, without a doubt, every seller I speak to is like all over their expenses and where they spend their money, and run very, very tight, lean ships. And I think, you know, for Olsam, we very much, you know, also want to carry that ethos into how we think about building our business as well.
Now, the key question, which you guys probably hate having to answer, but I think anyone watching this is probably asking themselves and wanting to know the answer for, is how do you value a business? How do you guys do it? I mean, usually there are like multiples that are thrown around. What's your approach?
Yeah, so on the valuation side, we typically, the approach we take is we look at you know, a seller's SDE, which stands for seller discretionary earnings. Now, someone might ask, okay, what's seller discretionary earnings? Essentially, it's your net profit, and then you add back whatever you as the seller have taken out as drawings. We look at that on what's called a TTM. TTM stands for trailing 12 months. So that's kind of looking back, you know, 12 months from a point in time. So, you know, we're here in March now. So typically we look at sort of February financials of 2021 going all the way back to March 2020. And then we typically apply a multiple. So, you know, we look at like where the market's at, what are the market multiples, like typically in the range of like, you know, 2 to 4 times. So really it's a question of, okay, you know, what makes a business kind of at the top end and what makes a business at the lower end? You know, in my view, like everything has a price and you know, a valuation. It's just, you know, understanding the drivers of that. So, you know, when we think about the drivers of the multiple, you know, typically we'd like to see like, okay, again, revenue growth, how's that trended over time? How does that look going forwards? Do we see big growth potential, or is things going to remain a bit flat? We think about, you know, the brand. Is there a very strong brand focus that they've built up? Is that protected by IP? What's the quality of their imagery like? And then, you know, then we look at like Amazon fundamentals as well. So, okay, what's their, you know, product rating? How does that compare versus competitors in their category? So there's like a whole array of factors that then go into that, you know, final multiple, which is applied to the SDE trading 12 months.
So we were just interrupted there by Zoom cutting out. Before it cut off, we were speaking about the price or the sort of multiple that people might expect. And you explained that there are different factors, and that you mentioned those acronyms like TT, which was
TTM, which is trailing 12 months. Yeah.
And
seller's discretionary earnings, which is SDE.
So on seller's discretionary earnings, you mentioned that it was the net profit, and then you add back how much the drawings have been taken. I guess for the benefit of anyone who actually takes dividends, you wouldn't look at that, would you? You would look at, you mean you'd add back their salary?
Yeah.
And
so
I think,
if they have, yeah.
Sorry, go on.
No, exactly that. So their salary, you know, there could be the case, for example, you know, I know it shouldn't happen, but sometimes people have their kids on the payroll and they don't do anything for the business. So, you know, those would get added back as well, for example.
Yeah. So all of the money that the business owner's taken is not really an expense. So you kind of get the true profit. And you mentioned you go back 11 months, well, the whole year.
Yeah.
Are you able to give people sort of an understanding of what level of multiples? Obviously, some businesses will get a higher multiple and some will get a lower. But I guess if I was selling my business, before you even enter into this sort of discussion, you kind of want to know, well, what could I realistically expect? Like, in your heart of hearts, if it's a better business or maybe a weaker business.
Yeah.
And yeah.
Yeah. So, I mean, I think, there's a number of resources out there to kind of, educate yourself about the space. And, from our perspective, we love talking to sellers that, have done a bit of research before entering the process. I think if you're listening to this podcast, you're already like one step ahead of the game, which is fantastic. But yeah, there's, a ton of resource out there, podcasts, articles, that talk about, multiples in the space. And, I think the main thing is kind of, when you go into the process that you are, committed to an exit, and that is what you're seeking. I think that's kind of, quite important. From a buyer's side, they also invest a lot of time and money in the process as well. And so it's kind of important that all parties are aligned on finding a way to get a deal done. And that's the kind of agreed end goal.
But I mean, and feel free if you're uncomfortable saying, but is it well, first of all, do you value it at a monthly multiple, or is it typically a yearly multiple? Because I've seen different places kind of mention the terms differently.
Yeah. So, I mean, just very quick crash course in terms of like, okay, you have some of the brokerages, the multiples that they, advertise are actually slightly different. So, if we take, for example, like website closes, the multiple that they publish includes inventory. But then if you take, say, for example, Empire Flippers, their multiples might on the face of it seem a bit lower, but actually they exclude inventory, and inventory is on top. Typically when I think, most of the listeners of this podcast will, on the whole be, I assume, sort of UK based Amazon FBA sellers, their preferred deal structure would most likely, in sort of 90% of cases, maybe more from a tax perspective, would be a share purchase deal, because, there's all the capital gains advantages. Luckily, the Chancellor decided, in the run up to this budget, he's decided not to go after entrepreneurs relief, but who knows for the next one how it's going to look in the autumn. But, so there's a massive tax advantage from doing a share purchase deal. And so again, the way that works is slightly different to what you might see on Empire Flippers or website closers that are perhaps more geared towards, US based sellers or people who want to do what's called an asset transfer deal. And apologies if I'm getting quite technical here, but I think it's important that, listeners really do kind of understand the intricacies of this. And, share purchase deal, the acquirer is not only buying the assets of the business, they're taking all the liabilities. And so that's a very different arrangement from a seller that's only buying the assets and is not inheriting any liabilities. And so, to sort of always kind of fixate on one multiple is actually, once you sort of scratch beneath the surface, it is quite different from what, one to the next.
Yeah. And I guess to elaborate on that, the inventory, that's essentially, because it's an asset, that's almost like cash in the bank, right? And because you're buying, if you're saying you're buying the shares, you're buying everything that's associated with the business. So if there's 100,000 in inventory and 100,000 in cash, someone would expect, well, you'd be paying at least 200,000 because you're getting the cash and the asset and the inventory plus the brand of the business. And I think from my experience, I've seen that typically it's usually someone wouldn't get a multiple on the assets because, if you're paying £1 for £1, you're not going to pay £2 for £1 because it's kind of, you'd be losing money everywhere. But I guess if you were then buying the business, like what's even the range of multiples that people would get? Like, is it as low as half of a year's earnings up front, or is it, 4 times? Because
it completely depends on the business. I mean, we've seen as low, if it's a business that has like serious issues, it could be, as low as like half times, 1 times for a business that's like in decline. and then on the upper end, it's kind of like 4 times. And it just, it's probably an annoying question, annoying answer, but it completely depends. And like every business is like different, has different risk profile, different growth trajectories. It's just, it's very hard. And so, even you can do your best to like benchmark yourself, but no business is the same. And so, that's what I think makes, our job's very exciting, and why we really enjoy it is really like getting to understand different businesses and, where the opportunities are and where the risks are, because every single one is different. It's always different.
Yeah. Was there anything you wanted to add there, Sam? So before I ask the next.
No. That's nicely summed up.
You've managed to avoid actually answering what sort of multiples people. Very, very diplomatic. But I mean, and sorry to be persistent with it, but I guess because I'll be sending this out to people who might not even be wanting to sell their business, but I guess if they had an idea, it helps them plan long term, or they get to a point where they just go, you know what? If I'm getting half a year or a whole year's worth of money up front, including all the tax benefits, it might actually make more sense to just say, well, I wouldn't mind getting that, because if I'm then not really working for a year, it's quite an attractive offer, right? And I guess it helps frame it, because if I could say to someone, well, look, reasonably, you can expect 9 months at least, or, if you've got a really good business, 2.5 years up front, it might then help get business for you guys, I suppose, which is what I'm.
Yeah, no, so that's why I'm sort of saying 2 to 4 times, and that's 2 to 4 times the annual earnings. That's what I mean by that. So I guess 2 to 4 years up front kind of thing, I guess. Is that better for me to phrase it like that?
Yeah, I think that's a bit clear, isn't it? Like if someone knows that they're getting 2 to 4 years, but then I'd probably just stress like 4 years, it would have to be a very good business, because so much can change. Like, and it's a huge risk for you guys if you're buying the shares as well. Like, you don't actually see that. The sales I've seen go through primarily have been US buyers, and they would never buy the shares. They usually pay for the assets. They don't want any risk.
And I think that's what is kind of really important to get across for Olsam, is that why we're so well set up as a UK buyer, because we can offer the same quick exit, but we can offer it in the most like tax advantaged way, which is a share purchase deal for like 99. It's like for 99% of UK sellers, it's the most tax advantaged way. So I think we've got a fantastic lawyer who's done, tons of transactions in this space, and it's, we have a very smooth process, so we can, give sellers that exit route that's most tax advantageous for them.
And the final question on my end that I think you might not like, but I'm going to ask it anyway. Do you guys have an exit strategy? Are you going to be aggregated by an aggregator, or do you see this as like a long-term income generating business?
Yeah, I think, Ollie and I, it would be, our founders all think about what the end goal is. I think, Ollie and I, when we started Olsam, we looked at all the potential different, exit routes, and there are a couple. As you said, one is to be aggregated, one is to be acquired by an aggregator. Another is to, I think our vision is to grow this into, Europe's leading next generation consumer goods company. I think we are building a company with a very long-term future. When we went into this, we were not in the business of setting up a company, buying a couple of brands, flipping them and selling. We are building a company which we hope will be, an incredibly successful consumer good company with an amazing technology component. That's how we look at it. And that's what makes us really excited, and that's what makes our team fully excited, because we're all sharing in this common, long-term goal. And that's what gets our investors really excited as well, which is why they're backing us literally with, some incredible capital. And
if someone's thinking of selling their business, what things should they be doing, I suppose, before they even speak to you? Is there like a checklist of things? Because I imagine there must be some businesses get in touch and you're just like, can you sort this out first, in the interest of time? What should people be doing before they even get in touch, and then I'll ask you what to do then afterwards.
Yeah, I think the key thing for us is for business owners to have like clean books. Is really helpful. We've had it before where the books are there aren't any potentially, so it's hard for us to help or offer any insights unless there are clean books. I'm sure, Joe, you would fully agree with that. But I think the first thing to say, we're happy to speak with all sellers. We love chatting with sellers. There's no point about it's too early. It's never like we love speaking with business owners. We love helping and guiding about what the next stage and for them should be. And we love hearing their stories. So there's never like, when's the suitable time? Like, we're open to conversations, whether it's really early, whether it's literally right at the last minute. We've spoken with business owners literally right at the last minute. So yeah, it really depends. We're open to all of them. But I'd say clean books is a really helpful starting point. Yeah,
no, I completely, agree with what Sam said. I think, do invest in a great accountant. It will be, the best investment you'll make, or at least one of the best investments you'll make. It saves, an enormous amount of stress through the deal process when everyone's aligned on what, the financial performance of the business is and what it achieved on that trailing 12 months. Having that number nailed down that everyone is aligned on just means the whole process itself is a lot smoother. And, it's something that I can't stress enough, get a great accountant who knows the space. It's super important. As a buyer, it's a great signal. Someone that has, a fantastic accountant that's well experienced in the space. That's fantastic. That gives us a lot of confidence in, the numbers that are being presented and on which we base our valuation. Because, at us at Olsam, we really want to follow through and close the deal. That's what we are set up to do, and we don't want to see it fall apart because the numbers turn out to be completely wrong. We have had instances where it has happened, and it has involved renegotiating. But for us, we really, really want right at the start to all be aligned on what the numbers are. And so, yeah, invest in an accountant.
That's not. I didn't pay you guys to.
I know you did. Full disclosure.
I did not sponsor this podcast. Well, fantastic. Ollie, Sam, is there any sort of anything else you'd like to add, or?
Yeah, I'd just say, if for sellers, thinking about an exit, looking for an exit, do reach out to Sam or I. My email address is ollie@olsamgroup.com. You can also find our website as well. Just Google Olsam Group. We'd love to be in touch. We are from the ecosystem. We're ex-Amazon, ex-Amazon FBA owners before we even started Olsam. So, very, aware of the process and what it might be like to, pick up the phone and we'll send that first email, but we'd be, very happy to chat.
Yeah, and I'd also say if it's not the right fit for us, we want to make sure we can point you in the right direction. So whether it's to a helpful resource, we want to help business owners navigate this what is potentially a pretty life-changing moment. So yeah,
fantastic. Well, just to add, I'll put any sort of links in the show notes, including your emails and things like that. So if anyone wants to get in touch, they'll know how to find them. Ollie, Sam, thank you both so much for joining me. I've really enjoyed it. On that note, see you soon.
Thanks very much.
Joe. Thanks for having us.
Joe.
And there you have it. That's the end of the interview. Did you enjoy it? And have you got any questions for Ollie and Sam? If you did, please leave them in the comments below. If you liked the video, leave a like. And one other thing I'd like to say is that after the call, I had a chat with Ollie, and he agreed that he probably didn't explain in too much detail about how they value businesses. And so he's actually going to come back on a later episode with me, and we're going to spend about an hour speaking about his exact process and methodology in valuing businesses. So if you've got an Amazon business and you want to find out how much it's worth, make sure you stay tuned. Push subscribe if you're not already, because you'll get an update as soon as we've had that video. Thanks a lot. Look forward to seeing you soon.